This is just a continuation of that video. Now look at this. This is what we just analyzed now. Now if you check your training guide, you we see this same part again, the head and shoulder. Can't you see the price was going up initially? It formed the first shoulder, then now forms head. So this head was meant to be taken out. The price was meant to go up, but because there was a lesser buying pressure, you understand? The pressure from the buy is not quite much. So that's why we now form the third shoulder. Now this is the neckline. Can you see how to draw the neckline? So you connect the what? The supports. So use your trend line to connect the support, understand, for the neckline. So the moment the neckline is broken down, right? As it is broken down, there will be retracement upward. You wait for retracement. When there is a breakout, then you wait for retracement to what? To this line, to this neckline. Then you now wait for your candle patterns to show up. So what are the candle patterns? Your pin bar. Can you say pin bar showed up? If pin bar showed up, you enter. Then if what is it called? Engulfing candle shows up, you enter. Or probably your tweezer, if it shows up, you enter. So the moment it shows up and there is a close of that candle, you enter immediately. Then you place your stop loss just above the second shoulder. Then you target your 1 to 2. I think it's self-explanatory. So easy. Understand? So then we now also have um inverted head and shoulder. This is just the opposite of what? Head and shoulder. Just that this one happens at the bottom of what? Of a trend. Understand? This one shows a buying pressure. Look at it. Price was initially trending downward, right? So it now formed this pattern, inverted head and shoulder, just like a W. Understand? This head and shoulder is just like your M. Okay, I think that is what you can easily use to what? To identify that pattern. So now we have a W pattern. You understand? It is called inverted head and shoulder. Can you see the head is longer than the two shoulders? You understand? This is the neckline. The neckline now is your resistance. Can't you see the resistance line? So you connect these points. You understand? So this is your resistance line. You understand? So price is actually meant to shoot up. So if there is a shoot up, you understand? Now look at this now. Your entry now is this engulfing, bullish engulfing candle. Can you see? It is not even a pin bar this time around. You see, it shot out, it broke out, it now retraced a little with this black candle. Then it now formed bullish engulfing candle, the one we talked about yesterday. Immediately this bullish engulfing candle closes, just enter the market. You understand? Then you place your stop loss just below the head of this second shoulder. Can't you see your risk? If you trace it down there, you will see it. Then your reward should be what? 1 to 2. And you see 1 to 2 before the price now starts to what? To reverse. Now if you now come here to the same thing that happened, and you see it, W, it broke out, then it retraced back to the line. You must always wait for retracement. There are times that price will not retrace, it will go back, it will just leave you. It is fine. You don't need to chase the price. You just hold on and wait for other opportunity. But most often, price usually retrace back to the what? To the neckline, to the support or resistance line, right? So upon that retracement, that is when you should be looking out for your candle pattern. So the moment your candle pattern shows up, you enter, then you ride the market. So this is it here. This is inverted. Can you see? It broke out, then retrace, then you enter. Then most often these patterns are not usually as smooth as this, but your ability to what? To identify it is very key. So by the time we go to the chart, you get to see all of this. You understand? In the chart. So let me see if I can still get, if I can find any of the pattern, these two pattern in the chart.